Hey, what is up, everyone? It is Friday, March 3rd. It's been a little bit since I did the last video. I've been traveling. So anyways, here we are going on for wrap up of this week, and then I'll have more going into next week as well. So starting off with the S&P 500, you can see it's in a Elliott wave move right here. And I started putting these back on the charts just because they help show where the move is right now. And so as you can see right here, going 0, 1, 2, 3, 4, 5, we are waiting for a pullback to eventually happen and come down to at least the 38% line, which if the high stays right there, it's 4,004.50. But I think the market's going to go up a little bit more, and let me show you why I think that. So one thing I had been looking at the past week and a half or so is a new setup to where when the price breaks out, we have a let me get that out of here real quick. When we have a day where the next day just takes off, as you can see from this day right here compared to this day. So what we do is we draw the low to the high, and we'll go over there and just put it on the daily extension target. And so that's what we look for. If the market is going to continue up, will continue up or move back down. We're looking for this target area to get hit, and as you can see, it did get hit right here. But there are days when the market just blows through that target area and it doesn't really have any resistance to it and just keeps on going. So when that happens, and in fact I need to adjust this one here real quick because I was looking at some other targets, but okay, there we go. So what we're looking for going into Monday is we're still looking for a little push up higher, at least in the overnight session when the market opens back up Sunday afternoon, Sunday evening. And what we are looking for is price to go up to at least 4,064.50 before there could be a potential reverse. And what we're looking for the potential reverse for the price to come back to would be the bottom of this rectangle I just drew, which is the orange line right here, which is 4,005.50. So going into Monday, we are looking for price to continue its rise up and get at least to here. It can, of course, go higher than that, but at least to right here, and that is when I will be looking at shorting. And if it keeps on going up, I will get in there as well. And then the target we're looking for, the soft target would be the top one right here at 4024.50. But then the main target down here for it to be over would be down here at the 1.146 extension level from the day that the market just straight blew, or the previous day when the market just blew up through it. For the target levels we're looking for is going to be right down here. So again, when Sunday opens up, going into Monday, looking for a pop up, and then eventually we are looking for a pop back down all the way to there. And then we also have the pullback we're looking for the 5-wave Elliott move, which is going to be this 38% line, 4,004. If the high stays, if not, we just keep dragging up to the high, and then the exit we're looking for is that 38% Fibonacci retracement level. Going over to the MFI, see if that can show us anything. Is not. It's the middle of no man's land right here, coming out of being oversold. And so it's getting up close to being overbought territory, but still has a little bit of ways to go. And then it does look like, as far as those go, well, that'd be that right there. And if we drop down lower, yeah, I guess that could be the trend channel right there, something like that, going back up to the top of the trend channel, right up like that for it. So that is where we are. Going over to the Russell 2000, MFI is not showing us anything, middle no man's land. So go over to the 5-minute chart, and what we have here is we actually have a longer setup for that blowout trade, to where the day we're looking at, the original day, was right here. This was the original day. I'll draw that on there real quick. So as you can see, that's the box I drew right there to show that it's a 1.146, and the 0.414 right there. Actually, I already had it on there. So then here's the next day right here where I drew from the high to the low, and the target area where I would have been first looking to get in was right here, 1.146, and this is the target we're looking for to close the trade. And as you can see, never quite made it down. We did when the market opened and going into, was that 5:40 a.m. and then at 9:40 a.m. it did push a little bit lower. It didn't hit the 1.146 level, but did push lower. Then went up, almost closed it out of the trade right there, but didn't quite hit it. I need to go a little bit closer for me to consider it filled, and so it's still a live trade and has been going on ever since. Then it finally went, hit down right here, as you can see, pushed back close to getting hit again, did not, and then just kept on waffling around. Again, used the 1.146 as the support area, and then today it finally pushed on up through to complete that trade. So that's how it works. That's just a little note reminding me about it. So we can go ahead and delete all of that. But that was how many days did that one take to get filled when it finally got hit? Let's see, 1, 2, 3, 4, 5, 6. So 6 days. But it eventually did. And then I'm not sure if we have it on this one right here. No, we don't. The Dow Jones has another setup for it. But going over right here, well, I did want to leave that on, cause yeah, this right here is just showing me. Wait, was it? Nope, it was showing me that was the potential Elliott wave. So for an Elliott wave to work on here, it'd have to be a really big move right here, because it's going back would be 0, 1, 2. We need to get up here a little bit, 3, but then price cannot break below that black line. So it could be right up here, but probably not, because what we need is the 38% to go up and get hit. So we need at least price to get about right here before we get that retracement down to the 38, assuming that would hold and wouldn't break the black line for it to go up. So that's what that would look like if we were going to get 5-wave Elliott move. So a lot would have to go right for it. So at this point in time, I'm going to say it's not going to happen. And then the only kind of trade we could potentially be looking at would be this one right here, where when price breaks above it, we start looking for the pullback, but not getting in, but am looking for it. But the pullback would be to the 30% line from where it's at right there. And the only way I'd be getting in for it is if price come up here and hit the 6.85% level right up here. I was getting a little bit earlier, 4.236, 3.618, but there are times price can blow through that. So it's better just to be safe and wait at least for the 6.85% to get into it. And the even safer one, which is pretty much you see it if it does go all the way up here with our retracing, is 11.89. But since this move right here is so big, it's not going to go up there and hit that. You need a move like this small one right down here, which already got filled, because you need it to come down closer to it. That we'll just change that to the billions. So you need to go up like something like that. But as you can see, when price broke it right here, it came down and would have hit the 30%. So that's why that one's not valid. So that's really the only one we're looking at right now, but it would have a ton of more room to go for that one to go up and get hit. So we'll leave it on there just to recognize what it's doing. There you go for that. And this one, the reason why this one isn't a blowout trade that we're looking for is, let me show you real quick why not. So as you can see, it did hit the 1.146, but it had such a big movement off of it. I consider that to be done for it. I don't really measure it with anything, but it did come down and hit the 38, assuming you use that anchor low right there for it. But since it had such a big movement off of it, I consider that to be done. So because a blowout trade means it can get a little bit resistance hitting the 1.146, but when it gets that big of a move back down, then that's good enough to be done. So that's why that one is the one we're looking for. Going over to Dow Jones, there's a bunch going on this page right here. So starting off, you can see we have blowout trade. There it is right there. going down the next day. Oh, you know what? It wasn't. I'm sorry. I'm gonna take this off. That's right. So I thought it was originally, but it wasn't, because you can see here's the day, here's the next day, and price does go below the trade a lot right there. You can see it keeps on working down, but when price hits the 1.414, it does go up and hit the 1.146 right there. So that one, see, there it is right there, 1.414 up to the 1.146, and that is the X you're looking for at the 1.146. So when price hits that, it goes up and hits that, it's over and said and done. So originally when I was looking at it, I didn't really notice that, and I was assuming it was a live trade for it, but it is not. So go ahead and close that one out. But what we do have down here, let me delete that as well. What we do have down here is we did have another, you know what, let me put that back on. There we go. Is that what I wanted? No, that's not even what I wanted. But we did have blowout trade right here from this day. You see price hit the 1.146, did retrace up a little bit, but not enough for me to consider it to be done, not up to the 38 for it to be done. So price came down, hit the 1.414, and then kind of rattled back up a little bit, but didn't really do a whole lot. And then, you know, I'm totally messing this up. It hit there and hit there, it's done. Yeah, that trade is done. So that one is good to go. I don't know what I'm talking about. And then we do have a live one right here for the blowout trade. You can see here's the trade right here. Here's the day. There's the low. There's the high. Price broke up, hit it right there. Then hit the 1.414. Never came back and hit the 1.146 and kept going up. And then here's the next day right here. That's going into it. In fact, I'm going to delete this right there. We don't need that anymore because this is the target level right there. And here's the next day for it right here. And as you can see, price broke up and went, because this is the blowout day. This is the original day right here. Here's the blowout day right here. Here's the follow-through day, which you see it did hit that, the 1.146, and we did get some bounce off of it when it hit it twice actually. Never came down and hit the blue line, which is the 1.414 level from the blowout day, which is the target we're looking for. Price has just been taken off ever since. So we are looking for price to come back down to this level right down here at, what is that, about 32,913. So where's that? So that would be a really good trade right there to get in for it. And that is the Dow Jones. Going to the 4-hour chart. Price getting really close to being oversold as well. So another thing to look for price selling off for the Dow Jones. And then there is the kind of this trade over here. But it hasn't hit anything that we're looking for. The earliest I'd look to get in would be 6.85, and that's all the way up here. So we're looking for that retracement back down to the 38% level for that one as well. And but yeah, we're looking for sell off here for the Dow Jones. And was that the same thing? Yeah, same thing for the S&P 500. So that and the Dow Jones are running in tandem right now. And then finally, going over to oil. Oil was real interesting today, because it looked like using the previous day's highs and low, and that's what this red bar is. It's the low of the day, and the blue bar is the high of the day. So using that, the daily, let me take this off of there, daily extension target, yeah. Using the day's highs and lows, we were looking for price had started out being a big blowout day, as you can see. Price just ran all the way down, kept on running down, and that's at 8 a.m. this morning, and then for whatever reason, right at 8 a.m., it stopped, and all the bulls came in and took off, completed that trade right there to the downside. But then we have a blowout trade to the upside right here, because price hit the 1.146, kept going to the 1.414, and now it keeps on going up over there. So going into Monday, we are looking for some more of a fall through initially to the upside to around $80.46. Price is currently at $79.88. Now, as you saw from some of the other trades, price does not always go up there and hit this target up there, $80.46. Sometimes it'll just pop up like right around here before it reverses course. But what I look for is going up there and hitting at least the 1.146. You get kind of like a fake continuation to it once you had this big, huge, solid up day, because it's basically, you know, there's the overnight, and then here's the still pre-market, but again, right at 8, it just took off and going on back up. So look for 80.46 to go at least that level to go get hit before we get the retracement, and the target we're looking for is going to be $78.97 for that one right there. So that's oil. That's the wrap up going into next week. Take care. Thanks. Bye.